In 2022, my dividend portfolio beat the market for the second year in a row, and in this month's portfolio update, which marks the very first one in the new year, I'm going to tell you how I was able to pull this off, and I'll also share with you all of the stocks that I bought last month in December, along with a couple that I actually sold out of. But first, I want to wish you all a happy new year, and I wish for you nothing but prosperity and an abundance of dividends in 2023. And in case you're new to the channel, my name is Ryan Williams, and here we strictly talk about dividend stocks and how you can invest in them to create passive income and reach financial freedom. So if you're on a mission to retire early, then hit that subscribe button. I'd love to stay in touch as we both continue to grow our portfolios and collect that cash flow. Also, leave me a comment below and let me know which stocks you bought in the last month. I'd be curious to hear what you've been adding to your portfolio. Now, taking a look at my dividend portfolio tracking spreadsheet here, which you guys can grab for free, there is a link to it in the description of this video. But here we can see that my portfolio is sitting at $40,865.68, which represents a decent drop in December. It looks like throughout the month I was down about $800, which as a percentage means I was down nearly 2% in the month of December. And I can't say this was the best way to close out 2022, but the silver lining here is that I still beat the market. While my portfolio was only down about 2%, the S&P dropped 5.5%, the Dow Jones dropped nearly 4%, and the NASDAQ dropped a whopping 7%. However, zooming out and looking at this on a year-to-date basis, my portfolio was actually in the green. Throughout 2022, my portfolio gained 0.3% and once again outperformed the rest of the market. Looking at those same three major indices, the S&P was down nearly 8% for the year, the Dow Jones was down 6.66% for the year, and the NASDAQ was down nearly 35%. And as I mentioned in the intro a moment ago, this was the second year in a row that I was able to outperform the market. In 2021, my portfolio gained over 31%, which beat the other three indices by at least a few percentage points each. And going back to 2022, I was very happy to see that the streak lives on. And after thinking about it, I think there are a couple reasons that my portfolio held up better than the rest of the market this year. Number one, many of the stocks in my portfolio tend to trade with less volatility than the market as a whole, meaning that they see less aggressive changes in share price. And one metric we can refer to illustrate this is the beta right here, which essentially measures the stock's volatility in relation to the market as a whole, with 1 being a baseline. So if a stock had a 1.0 beta, it's trading at the exact same volatility as the market. Anything greater than 1, there's more volatility. Anything less than 1, there is less volatility. And just taking a quick scan through most of my holdings here, we can see that pretty much all of them have betas less than 1.0, so they're trading with less volatility than the market as a whole. And when you think about it, it makes sense considering none of the stocks in my portfolio are those hot and flashy, high-flying ones that many other people like to buy. Instead, most of my portfolio consists of those safe, sleep well at night stocks like Procter & Gamble, Johnson & Johnson, Coca-Cola, Altria Group, and Southern Company, just to name a handful. And chances are that these stocks won't see huge, momentous gains in share price when the market is roaring. They'll see some, but not to the extent of some other stocks. And on the other hand, when share prices come tumbling down as they have been all year, these stocks are likely going to hold up a lot better, which is one of the things that I think helped me beat the market in 2022. And with that, the second thing that worked in my favor, I think, was just good timing. Some of my holdings like KRC, Lowe's, and Starbucks all saw decent losses this year, but the timing of when I invested money into those positions helped me mitigate a fair amount of those losses. Just showing you a few examples of this, starting with Lowe's here, who was down 22.5% for the year. They started off 2022 at about $250 per share, but I didn't start buying this stock until it was right in here, just about $200 per share. So because of the timing of when I started buying, my Lowe's position is actually up about 4%. The next example here is KRC, who is down 43.65% for 2022. At the very peak, they were sitting at about $75 per share. But once again, I didn't start buying till it was like right down here, about $50 per share. And furthermore, as many of you guys know, if you've been watching my videos, as soon as I started this position at the end of August, it just kept getting cheaper and cheaper and cheaper. And what I did is I just kept buying more and more every single week, lowering my average cost per share, which has really helped me minimize my negative total return with this position. And this strategy has also worked really well for me with Starbucks. Now, Starbucks kicked off 2022 at over $100 per share. And at the time, my average cost was just under $100 per share. But things headed south really quickly for Starbucks in 2022. As you guys remember, it dropped to a low of about $70 per share, just under 70. And throughout all of that time, guys, when the share price was coming down for those 3 or 4 months, I was buying Starbucks every single week. And in doing so, it helped me lower my average cost per share with Starbucks to just under $100 to now just under $90 per share. And I'm really glad that I did this because lowering my average cost per share has helped me generate a better return with Starbucks today, which is currently sitting up at about 11.3%. And having said all this, even though I've had some luck in my portfolio these last couple of years, I don't think my track record of beating the market will be an extensive one. I mean, you guys know how rare it is for professional portfolio managers to consistently outperform the market, and I don't want to sell myself short, but just being realistic here, it's probably not going to happen year in and year out, which is is completely fine by me because truth be told, my main objective really is not to beat the market. I mean, you guys know I'm not like a professional at this or anything. More than anything, I'm just trying to build up enough dividend income to pay my bills and live comfortably, which I can certainly accomplish without having to worry about beating the market every year. But anyway, guys, switching gears and getting into my best and worst performing stocks for the month, my top performer, believe it or not, was Southern Company, who jumped nearly 10% in the last 30 days. This was followed by Procter & Gamble, who was up nearly 5%, Realty Income up nearly 3%, same with AbbVie, Verizon about 2.5%, Coca-Cola about the same, and then we had a couple others in the green before we get into the red. And now getting into my worst performers for the month, here you guys will see there's actually one stock blurred out. And I don't want to spoil it just yet, but this is a new stock I just added to my portfolio, which I will be telling you guys all about in a video next week, so stay tuned. But otherwise, guys, I've had some stocks not do very well in the last month. Intel was down 9.3%, ORCC was down 9.2%, KRC was down 7.5%, 3M was down 4.5%, Snap-on, AT&T, JEPI, Lowe's, all the way down to Chevron, all in the red in December. But hey, you guys know how it goes. The silver lining here is that it made some of these cash flowing dividend stocks cheaper to purchase, which means we're able to get more bang for our buck. And with that, getting into my transactions for December, we're actually going to kick off with a couple sells. You guys might already know this, but I sold out of Lockheed Martin and I had a nice gain there. I sold at about a 40% profit, or just above $500. Along with that, I also sold XYLD. I had a 20.5 share position that I sold out of at a 20% loss, but my total profit between these two was just above $300, so I came out in the green. And I used these funds and redistributed that across my portfolio into a handful of great stocks. I added to KRC, invested about $360 there and got 9 shares. I actually dumped some money into JEPI as well, which I haven't done for a long time. I invested $480 there and picked up 5 shares. Along with Johnson & Johnson, I loaded the boat, invested about $940 and got 5.26 shares. And then also throughout the month of December, I put a decent amount of money into ORCC, about $200 and got 16 shares, which officially put me over the 100 share mark with the ORCC. And then I invested $940 into Procter & Gamble, got 6 shares of that. And then I also threw $70 into this mystery stock, which once again, we'll be talking about that next week. But last but not least, guys, I invested $200 in my Roth IRA, bringing my total purchases for the month to $3,191.12, which is a lot of money. But keep in mind, guys, most of this was already in my portfolio and I just shifted that money around into other positions. And just giving you a quick update on my Roth IRA, which I have through M1 Finance, it's sitting at about $2,900 and I'm down about 4.6% in the last 30 days. And then all time I'm down even more. I'm down 7.63%. And just so you guys can see what I'm holding in the Roth, I have 4 different ETFs: SCHD, VU, VYMI, and VBR, all of which are down except for SCHD, which is doing pretty well for me. And moving on and getting into my watch list, you guys will see that I really consolidated things in the last 30 days. And I only have 3 stocks currently on my watch list now. I have Kroger right here, I've got Rollins, and I have Tyson Foods, all of which are high growth dividend stocks. And I think the valuation on Kroger and Tyson Foods is looking pretty good, but Rollins is still questionable. And either way, this month in January, I'm going to spend some more time with each of these 3 stocks and see if I can come to a consensus one way or another, whether they move their way over to my buy list or make their exit from the watch list altogether. That's one thing I definitely plan to do this month. The next thing is, now that we're through the holidays, I plan to resume my weekly contributions into my portfolio. And I'm going to use most of those funds to continue building out my position with this new mystery stock, which I'm so excited to tell you guys about. And I'll also probably continue adding to other stocks as well, like KRC and Lowe's, which hopefully will make its way back down under $200 per share. So those are all of the stocks that I'm planning on buying this month. And if you want to hear about some others that I'm most definitely going to be staying away from and suggest you do the same, then check out this next video right over here. In this one, you'll learn about 3 pretty popular dividend stocks that many investors love to buy for their extremely high yields and monthly dividends, but truth be told, they're not great investments and you should avoid them at all costs. So click right over here and I'll see you in the next one.